Okay, hello everyone. Thank you so much for joining this episode of the On the Mark Financial Forum and Podcast. I have two lovely guests today, Dina Mayberry and Kelila Heller. Thank you both for joining us.
Thank
Thanks,
you for
Mark.
the invitation, Mark. It's a pleasure to.
Absolutely. So Dina, why don't we start with you first? Why don't you tell the audience who you are and what you do and what makes you tick, why you do it?
Oh my gosh. All right. I'm Dina Mayberry and I'm with BGA Insurance. BGA stands for Brokerage General Agency. And what that basically means is we're brokers for life, long-term care, and disability. We have all the carriers and we shop the market in all the states. So I just love insurance. I just find that there is peace in planning. And when you plan ahead, you can sleep better at night.
Amen to that. And then you might make our friend Kalila's job just a little bit easier if they plan ahead. So Kalila, why don't you tell us what you do?
Yes, I love when clients have long-term care insurance, and we'll talk about that. So my name is Kelila Heller. I own Assisted Living Connections with my business partner, Tammy Podell. We cover Southern California, particularly Ventura and LA County, where we help families find assisted livings, memory care, residential care, independent senior care. And it's a free service. I have a team of 6 people, and we love supporting families figuring out what are we going to do when mom falls and breaks a hip and she really can't go back home.
Right.
So we will talk to people no matter what their budget and help them figure out what are the solutions.
Sounds good. Well, and I know the two of you have known each other a very long time and that you guys interact a lot with each other. So maybe you can tell us, how do you guys engage? How do you work together to kind of create that synergy to help families?
Well,
start,
let me
Dina.
take it from there. So I have known Kelila a very long time. Kelila actually came to my family with my mother helping my grandmother find placement 3 different places. And my mother used to always talk about the angel Kelila, who has helped our family in moving Nani from place to place. And my mother became friends with Kelila. And then when I joined Provisors, our networking group, there was Kelila in the room, and I just couldn't believe it. And I have referred countless people to Kelila because people just don't know where to turn. So let's say mom breaks a hip or mom needs help either inside of a facility already, or if she needs to go to find a new facility, she just knows everything there is to know about all the assisted living facilities in the area. So I refer people to Kelila because she just knows all the information. She knows all the details.
Right. And Kalila, how many different facilities are there? Like, for people that aren't familiar with this, maybe they haven't been in that crisis mode, or they haven't had an aging parent that's at that stage where they might need placement. What does the landscape look like?
So there are hundreds and hundreds of locations in Southern California. We particularly focus on Ventura County, San Fernando Valley, and Santa Clarita Valleys, but I have colleagues all over the U.S. who do this, who I can connect people with. So in the area we cover, though, oh my gosh, there must be 800 locations, because not only are these large assisted livings, but they're these small little residential care homes. Like with Dina's grandma, usually we want to only move person one time, but sometimes they'll be in the big assisted living. And as time goes on, they're starting to need more and more and more help. The big assisted living is getting more and more expensive. And sometimes there's smaller assisted livings that are a better fit for a family. So sometimes you do have to move people. But there's, you can go online and look up, or like you can, there's online agencies that'll give you a huge long list, but they don't know the places. You want someone local who's going to actually take you on tour, who's in the places all the time and can give you all the background. And can help you navigate. Like the person I talked to today, it turns out she was looking for her father, and he was a World War II vet. He had no idea that there's a Veterans Aid and Attendance program. The VA doesn't advertise it, but I've turned hundreds of people onto this program where he can get money for the rest of his life to help pay a portion of his assisted living and care costs.
Yeah, that education is so critical, because it always baffles me how many people make decisions without knowing what their resources are. And we run into that on the mortgage side as well. But the implications are significant, because without that, I don't know exactly what the benefit was, but I'm sure it was significant enough to make a difference, especially if that veteran was, going to be placed for several years potentially, or their family would have had to help foot the bill, or maybe their long-term care policy wouldn't cover all of it, there could be significant implications on the family.
I mean, most people unfortunately, don't have long-term care policies. If they do, it's like, oh, thank goodness. I mean,
Right.
so the veterans benefit can give a veteran, if he needs help, up to $2,300 a month for the rest of his life. That's a significant money that people and widows. The widows benefit $1,500 a month for the rest of her life. So, and a lot of people don't know about that. But
Yeah.
we're going to talk about, how do you pay for things in this conversation, and you two
Right.
are equal to that.
Yeah, for sure. And we're definitely going to get into that. I'm very curious to know, how do you get to know 800 facilities or thereabouts? And what are the criteria that you usually use when you're working with a family to determine, obviously I'm sure you narrow it down. You're not touring 800 of them with each family, right? So you probably know which ones may be right or in the right location or whatever it may be. So what are usually the main factors that you're using to determine which ones to show them?
So, typically people will call us. They'll be referred by a hospital, a doctor, another senior living facility, a nonprofit. All the nonprofits in the county send us their clients. And depending what they're looking for, it could be an independent person who's like 63, but they're not driving anymore. So they might need a more independent location. So there are fewer of those. And we might look at, since we have been in all the places and toured them and we have a contract with them, we might look at 50 places, and then we'll narrow down the family's choices to, okay, here's the top 4 or 5 places. Here's a curated list that is going to fit your needs. What's your budget? Where you want to live? What are the care needs? What are the social emotional needs? And then we're going to rank all those places by what we think will fit you best, but you're going to make the decision. So we'll usually be touring with the kids, the baby boomers. We might go to 2 to 4 places to start, and we're usually have it all narrowed down for them so that they can pick from the places that are going to be the best fit, that are close to them, that will fit their mom or dad or their spouse.
Right.
And because we have the background on all the places, we can tell them about the management. What is the care like? Maybe mom's reverting to her initial native language. Like in Ventura County, there's one place where they speak Lithuanian. Well, we know that place. Or there's one community in the Santa Valley where the most residents are Korean. Well, we know that place. So that's part of making the fit for a family.
Interesting. Yeah, I never would have even thought of that aspect. The financial one and the location, those are more obvious than speaking Lithuanian or Korean.
And by having all those contracts with all these places, that way we can help a family who has a limited budget. They only have like 3,400 to spend. If they have less than 3,000, it's pretty hard to find anything. Then we talk to them about Medi-Cal and what you have to do there.
Right.
But by having those budgets, all those places, then I can say, in this range, 3,500 to 5,000, here's the places. It's more limited, but you don't have to spend $10,000 to be in assisted living. People have that idea, oh, it's going to be $10,000 or $12,000. Well, if you have a long-term care policy or you get a reverse mortgage, you have a lot of savings. You can do that. Those are the really nice places.
Right. For
But now
sure.
you don't have that much.
Right. And what would you say, like, how many of the families that you typically talk with have a long-term care policy? If you had to put a percentage on it, ballpark, I won't hold you to it. No testing afterwards.
10%,
Yeah.
maybe.
Dina,
Yeah.
why do you think that is? Why do you
Because
think so?
everyone thinks they're not going to use it. It's not going to happen to me, right? So I do life insurance and long-term care. Life insurance is an easier sell. Everyone's going to pass away, right? But with long-term care, we still have that denial that it's not going to happen to me. But what the industry's done, which is really great, is they've merged life insurance and long-term care policies together. So it's not this use it or lose it proposition that it used to be. So let's say, for example, you end up buying a long-term care policy and you pay into it maybe for 10 years, or you can pay into it for 20 years. And then the policy is what we call paid up. So no further premiums, but the policy is going to continue to grow as you age. And then let's just say that you don't need Kelila, you don't need anybody to help you. You end up passing away peacefully in your sleep, no long-term care. Every bit of premium that you put into that policy will then be returned to your family in the form of life insurance. So It was insurance, yes, but at least there's something that can happen at the end of the day if you don't need long term care. Now, if you do need long term care, that's the big bucket. That's the big bucket of tax free money. So you turn that on, and then you're able to pay for the facility. And that's with tax free money, which is, I don't know where to get tax free money, but tax free money in a long term care policy is golden. Nobody, I kind of joke with people and I always say, never have I ever met anybody that was upset that they had a long-term care policy when they needed care because they're just excited to have all this tax-free money.
Right. Well, the only other tax-free money is debt, but that comes with strings attached.
That long-term care policies, people always want to stay in their home. And that will enable also for long-term care in the home, that will enable you to have a home care company come in and pay them.
And I find that, Kelila, that happens often. People will stay in their home in the beginning. And let's say you're married and you just need maybe 4 hours a day to let your spouse be able to leave the home because otherwise they're captive in the home too. So the spouse can leave, you get part-time care. And then as things progress, perhaps you do need to move to a facility. And that you have options. With the long-term care policy, you can use it for adult daycare, you can use it for a facility or home care. You get to decide.
And Dina, could an adult child get a policy for their parent, or does it have to be the actual individual that's getting it for themselves?
No, they can. If they want to pay for a policy for their parent, they absolutely can. Absolutely. The pricing is based on age and health. So of course, the younger you are and the healthier you are, the less expensive the policy will be. Having said that, however, is we have annuities, long-term care annuities that go up to age 85 years old. And there's one particular annuity that only has 5 knockout questions. And those knockout questions are basically, do you have Alzheimer's? Are you already bedridden? Are you on oxygen? Are you using a walker? So if you already need care, if you're already contacting Kelila, you cannot get a policy. Your kids can. But then there's also people, I see people, I'm sure both of you do too. I'm seeing people that are aging and they are living a long time and they're healthy. I'm working with an 80-year-old woman right now. She's healthy.
Yeah. Well, life expectancy is definitely longer. The cost of care is also higher than it was. So how do people plan for that? Do the policies adjust for inflation to increase over time to account for the cost increases, or how does that work?
They do. The normal policies now are 3% compound inflation. So you buy a policy now and you'll have a monthly amount, let's say $2,500 to $3,000 per month today. And then it's going to increase as you age, 3% compounding. So when you're in your 80s, it'll be a bigger number. And of course, the longer you go without using your policy, the bigger the monthly benefit will be.
Right. Okay, that makes a lot of sense. So let's say, actually, let me ask you another question, Dina. How many people, when you're planning with families, how many people are planning for that, let's say that $10,000 a month benefit versus a few $1,000s a month, where maybe they're planning to cover a portion of what they anticipate the cost may be, or what we're all advising them the cost may be, versus people trying to have a policy that might cover all of it?
That's a great question, Mark. Back when I started in long-term care insurance and life insurance in 2007, we used to have a Genworth cost of care study. And we used to go there and say, okay, well, let's put in your zip code and let's see how much the care is. We've really thrown that out the window because now it doesn't matter how much care is. It really does matter how much you can afford to buy in a policy. So we always talk about repositioning some of your assets today to be able to buy a policy so you can use it later. And I think it's a win if you can cover half the cost. But, my crystal ball broke a long time ago. I don't know when you're going to go on claim. I don't know how long you're going to be on claim. I don't know how much care you need. Do you need care Monday, Wednesday, Friday, or do you need full-time care? I don't know. Something's better than nothing.
I tell people all the time, I see people all the time living to be 90, 95, 100. I said, and those baby boomers, you're going to live that long. You need to have this money set aside. And ideally right now, if you're going to be in assisted living, you want to have at least 7,000 a month to be in a nice place and have a 1-bedroom apartment. Um, and if you're going to be staying at home, I mean, we might want to talk in this conversation about the cost of home care. Because
Yeah.
people think, oh, we'll just pay my housekeeper's daughter. It'll be 20 an hour, right?
Yeah. Not so much.
Do you want me to talk about that? Because I think that's important
Please.
to know.
Yeah, absolutely.
That my company refers people to in-home care all the time because that's where people want to start. So we only refer licensed, bonded, and insured home care agencies. Those agencies are going to do the background checks and fingerprints. They're going to have multiple caregivers for you. They're highly trained. They're the ones paying workers' compensation insurance and all the employment taxes, following all the employment laws. You are covered. Those companies charge $35 to $40 an hour now. So if you need over 4 hours a day of care, I mean, just 4 hours a day of care is going to be around 5,000 a month. If you need 24/7 round the clock care, that's going to run over 25,000 a month. So very few people can do that. But, and a lot of people want that. They think they can have someone just come live in. In California, there are no independent contractors in assisted living in-home care. Caregivers coming in. So if it's your housekeeper's son or something, or a friend's granddaughter, or whoever it is coming into your home, you need to be the full employer to protect yourself. You need to pay those employment taxes, follow all those employment law, just like you're a large company, and have workers' compensation insurance and have more than one caregiver to cover. It's a big ask, and most people have no clue because they've never had to hire household help. It's different than having a house cleaner come in every other week.
Yeah, and actually sat in on a very enlightening presentation once, which was from an employment lawyer talking about having these private, friends of the family, so to speak, come in and get paid and, an hourly wage, and they just write down their hours on a Post-it and then they throw it away and there's no records. And then 10 years later, those people come back and sue for overtime and all the back pay, and it could be hundreds of thousands of dollars, and there's nothing to verify how many hours they actually worked. And so, you either pay the legal fees or you pay the claim, the settlement of some sort. But it was crazy, and that's when I first learned about what you were talking about, Kelila, was you have to act as though you're a big company employer if you're bringing someone into your house, even if it's someone
Yep.
right? Yeah, and you don't want to get yourself into trouble.
And I mean, your liability costs are huge. And those people who go to those employment attorneys, they win.
They do. Yep.
Sure. Because there's probably no documentation. Those Post-its don't last. You can't go and fish them out of the trash so easily, So that was I was shocked by that, but it makes a lot of sense. But also, what do you do if that person, wants to go on vacation for a week or two? Then you don't have anybody. But if you have an agency, they obviously, I'm sure, have coverage for people. If your normal caregiver isn't available, they'll have other people on their roster that can come and help.
Right. I find that the caring falls on the wife or it falls on the oldest daughter. It'll fall on a family member first, and that's really hard. Caregiving for a loved one is very hard, emotionally hard. But when there's not a policy, people feel like they have to do the care themselves. No, I'll take care of my husband, or the daughter says, I'll come in, I'll move in and take care of you, mom. But if there's a policy, then you can hire someone and use the tax-free money. It's a very big psychological misnomer that people think, oh, I'll just self-fund.
Yeah, easier said than done. Well, and I'm curious to know how often, maybe Kelila, this comes up on your end because Dina, you'd be involved earlier in the process in the planning, but how often do people have to settle for less care because they feel that they can't afford what they actually want?
That happens all the time. I mean, where they'll have less care than they really need coming into the home because they can't afford it. Or, when they start really learning about assisted living, I mean, it's like these aren't nursing homes we're moving people to. These are like cruise ships on land or senior resort living, and If you have a policy, then you can be in a place that has really good food and really good care and nice amenities. I mean, the kids I take on tour, they said, I don't know about mom, but I'm moving in. I want to have all my meals and all my driving done for me and all these fun things to do. But if you don't have the money, there are places that are less expensive. Okay. But they are going to be in not such nice areas because a lot of it depends on the cost of real estate where assisted living facilities are located and what they're charging. The food won't be as good. It'll be people can get the care they need, but it's you have to look at what kind of life do I want to live. And if
Right.
I'm 90, you know, you want to be in a nice place.
Well,
Yeah.
I'm good. I want to be in a nice place, that's for sure. Well, and women, long-term care costs more for women than men. Why? Because women typically live longer than men, right? There was just a study that came out that 73% of one of the carriers I represent, their claimants, the people on claim, are women. 73% are women. So if
Re-
you're a woman and you're watching or listening to this, really take this to heart. And I'm working with women in their 40s now, women executives, women that are making a lot of money that are like, I am going to get a policy and I'm going to lock this up and not have to worry about it.
That's a smart way to go.
It is.
So maybe we can talk a little bit about some of the solutions that we might be able to provide in the event that we have this shortfall. Because I think what we often find when we're talking with seniors and their families, usually the adult children are the ones we're communicating with, is, they'll say, we can't afford care, but we have this home that we've owned that mom or dad, or hopefully mom and dad, have owned for 40 years. Because the generation that we're talking about is what I refer to as a buy and hold generation. They've lived in their homes for 40 years. I don't know many people, I'm in my mid 40s. I don't know many people at my age who have lived in the same home for 20 years, unless they're still living at home with their parents. But that's a different topic for another session. But oftentimes, if especially in Southern California in particular, but a lot of areas, if you've owned a home for 30, 40, maybe 50 years, that home is worth a lot more than what you bought it for. And I think oftentimes what people turn to with assisted living, I would imagine, Khalil, love your opinion on this, is, we can't afford home care because it's really expensive, because it's 1-to-1, and or maybe we have to shortchange ourselves on how much time we actually can get, but we can't afford home care. And so we'll just sell our home to be able to pay for assisted living. And then they have a pool of money that they can use. But what people often don't know, and this is why we're big proponents of having lots of advisors, like everyone from tax and, insurance and placement and estate planning and the whole gamut of advisors, is that people don't know about the step up in tax basis, which basically means that when you sell your home, how much capital gains tax are you going to pay? And if you sell your home before you pass, you might have a very large capital gains tax bill if you've owned that home for 40 years, for example. But if you can hang on to the home and maybe you finance your way through those costs as opposed to selling the home, you may end up paying zero taxes for capital gains tax if you end up selling the home, or the family sells a home after the senior passes. So some of the solutions that we can provide is to try to help people not evade taxes. We would never want to do that, but a tax strategy of not being forced to pay those taxes. Because we came across a situation recently. Unfortunately, it was too late to help because this had already happened. Someone in Orange County who had bought their house for $30,000, and then the family at 97 years old, the lone remaining spouse, the wife, of course, because she outlived the husband, just as you said, Dina, they sold their home to pay for the care. And they probably paid $1 million in capital gains tax rather than giving that money to the family. I mean, who wants to do that? Nobody wants the IRS to win in these cases, especially when families could really use that money and put it to good use. So,
What would you do? Because if she moved out of the home, if with reverse mortgages, I mean, I see this with spouses where a woman will place her husband, say he has Parkinson's and she can't take care of him anymore. She's 88, he's 93. And then she get the reverse mortgage so she can pay for his care. But what happens if just mom living there? Are you saying you can get the reverse mortgage and bring care in the home? Right.
Well, and I'm glad you asked because there are products that are not reverse mortgages that are designed to meet the unique qualifications of seniors, right? Because seniors mortgages are traditionally underwritten based on income, right?
Mhm.
Lenders are very driven by, oh, how much do you make every month? Whether it could be Social Security, it could be pension, it could be, VA benefits, could be any number of things. But seniors notoriously have that issue of being able to qualify for conventional financing. So some of the products that we have are not reverse mortgages. There are different ways for seniors to be able to qualify for a loan that they otherwise wouldn't qualify for. So that the question you were alluding to, or the root issue is that for those who are watching that may not know this, once you move out of the home, you have to pay off that reverse mortgage, whether you're planning to sell the home or not. You've got a handful of months to be able to pay that off. And so if, for example, and I'm assuming, Kelila, you've dealt with this before, where somebody tries assisted living, maybe it's not for them, and then they want to come back home, but it's too late. If you've had to sell your home because you had to pay off the reverse mortgage, that's not really a viable option. So some of the products that we have are not reverse mortgages for that exact reason. Sometimes those are a better solution if people want to have the option to come back home, or if they want to potentially rent the home in the meantime while the senior is in assisted living so that they can actually supplement whatever the shortfall is. Hopefully they've gotten the policy that they should have gotten 20 years prior. But if they haven't, they can actually use the rental income to help pay for any shortfall in care needs as well. So there are lots of options that are not reverse mortgages that we can provide to seniors, and we have senior friendly underwriting where it may be based on more on the value of the home, or maybe if they have some funds in an IRA or something like that, there's loans that are based on how much you have in retirement assets or things like that. So there's some creative solutions that are alternatives to reverse mortgages that may resolve that issue where they're not living in the home anymore if they move into assisted living.
That is great.
That's great.
Good to know.
Yeah, and that's partly why, we do these sessions, is because we want people to know that these options exist. Because notoriously, when you think of seniors and a mortgage, it's a reverse mortgage, right? And they serve a purpose. There are reasons why sometimes a reverse mortgage would be a great fit. And I know the three of us know some great reverse mortgage people in our networking sphere. I'm actually doing a webinar next week about this exact topic, called "To Reverse or Not to Reverse," which we're really looking forward to, because I think even people who've been in the industry for a very long time may not know that there are alternatives to a reverse mortgage that may be a better fit if someone, for example, is moving into assisted living, or in the example that you gave, if it's a husband and wife, let's just say, and one of them moves into assisted living now, but at some point, maybe the other one's going to want to join them. And then what do you do? If you have a reverse mortgage, you're almost forced to sell the home, and then you're forced to pay those taxes that nobody wants to pay.
So that's where we can that creative financing to help pay for the husband while the wife is staying in the home.
Exactly. Without necessarily tying them to the home where they feel like they can't leave if they
Right.
want to, because then they have to figure out how to pay off that reverse mortgage. So that's what we want to do. We want to give people options and information. That's exactly why we're here today, to talk about all these things. And it's not all about financing. I really want to highlight the two of you as important people in my network to help people understand, first of all, how important it is to plan, right? Dina, you hit on that, and that I couldn't agree with you more. And then the planning leads to the level of care that you can potentially afford. And if there is a shortfall, you're kind of going down the domino, right? Call Dina first, then call Kelila. And then if you fall short and you want better care, you can call us and we can help you solve that problem.
A lot of people who call us, only have Social Security left. Sometimes
Mm-hmm.
they don't even have a home. So I just have to address that people should know that the Medi-Cal programs, which is Medicaid, so Medicare pays for your hospital visits, doctor visits, if you need to go to a skilled nursing for rehab short term. That's Medicare. Medi-Cal and Medicaid are the same programs, federal level, but the wait list is very long for
Mm-hmm.
people who are just Social Security and need help. So, I'm trying to educate all the time, baby boomers and their parents. Don't wait to the last minute thinking your mom's going to move to a skilled nursing facility or an assisted living and the government's going to pay for it. It is not happening.
Right.
And now with all the new shortages and the cutbacks that are happening, the programs that are available for people who are low income to move into assisted living, the wait list was about a year to get into a program like that. Well, now the program's completely frozen. Nobody's getting into assisted living with the government paying. And it's the wait list, we don't know. It could be 2 or 3 years.
Wow.
So
Yeah.
I bring that up that we will help talk people through it, how to get into the programs, but that boy, if there's any way you can plan a little bit farther in advance. Sometimes we can move people to an assisted living for a while and they'll spend down the rest of their money and then they'll be able to get into this Medi-Cal program. But then it's helpful if they have at least a year's worth of resources left.
Right. And if they have a home, maybe they could borrow those funds in order to
that helps so much.
Yeah. And what about, Dina, maybe you can explain this, the elimination period. Can you explain what that is? And then Kelila, how that might impact placement?
So some of the carriers don't have elimination periods anymore. It's kind of like a deductible time. I have one carrier, Lincoln Money Guard, and they have a 0 elimination period. So if you had this gold policy where you had all this tax-free money and you went on claim, and let me back up. Going on claim means that you cannot perform 2 of your 6 activities of daily living. And those are, think about your day. Getting up out of the bed, so transferring, bathing, dressing, toileting, eating, or if you're incontinent. So if you can't get from your bed to the chair, or you can't toilet, or you can't eat or dress yourself, then you would go on claim and you would get the money from the insurance policy. The other trigger is, of course, a cognitive impairment like Alzheimer's or dementia. So if you can't do 2 of those 6 or you have Alzheimer's or dementia, then you go on claim. And most of the carriers nowadays are 0 elimination period. So you can just start getting your money. And we have some carriers that are reimbursement, which means that you would use your receipts and you would get your money back. And then we have other carriers that are cash. They'll just deposit that amount of cash into the checking account every month.
Right. So if somebody placed a policy, let's say a while back, and there was an elimination period, how does that work?
So that would normally it was 90 days back in the day. So 90 days, there would be no money coming in. So they would have to use their own money, their own cash. And then at the 90th day, they would start getting their money from the
Got
carrier.
it. So if the family doesn't have that capital, I would assume, Kelila, moving on to you on this topic, what do they do if they don't have the money? They're stuck.
Well, I mean, go to you for creative financing. I know there's short-term loans you can get. There's really low and no interest loan that are called bridge loans. I mean, you could speak that better than me. I tell people about that are specifically for this, help pay for you to be in assisted living, have home care until your policy kicks in.
Yep.
But a lot of times they go to family members.
Family's really good for a little while.
Yeah.
Family, rises to the occasion in the beginning, and then everybody burns out, and then it's like, okay, now what are we gonna do? So
Right, especially when it comes to money, people burn out even faster.
Yeah.
It's a unique family dynamic, to say the least. But yeah,
And
you're right.
I want to squash the myth that long-term care insurance is too expensive. I can't afford it. A lot of clients will say that to me, and I say, well, how much do you think it is? And they really don't have any idea. So my takeaway that I hope is taken away by people listening is that there are so many plans out there that are great, and they are flexible premiums where you can pay monthly, you can pay annually, you can pay over a certain length of time, and it doesn't need to break the bank. And then everything that you pay in will be returned in the form of life insurance if you end up not using it.
I can see why they created those types of policies, because kind of like car insurance, you use it or you lose. You're paying, but if you don't get in an accident, you don't get that money back.
We're all sick of that. We're all sick of that kind of insurance. Yes.
Right. Well, maybe they'll roll car insurance into that as well someday. Probably not. But I think we've covered a lot today, and I just wanted to thank you both so much for sharing your time and your insight with our audience, and hopefully people will have learned something about this. I think the common thread all the way through is plan ahead. If you don't plan ahead, you're increasing the risk of having a more difficult circumstance at a time where you probably need things to be as easy as possible. I appreciate it. Thank you both so much. Dina, we'll start with you. Yes, I was just going to say, Please, Kelila, I was just going to say, how can people find you?
My company's Assisted Living Connections. The website is assistedlivingconnections.com. And you'll see a really complete description about everything about senior living. And also you'll see and access all our Yelp and Google reviews. We've got the highest reviews in California.
And I can speak from personal experience. I know there's a lot of people who professionally support seniors who speak the world of you. And same thing for you, Dina. So Dina, how can people find you if they want to inquire about getting their act together and saying, okay, you're right, I agree, I need to do this?
And let's have the conversation. I am so not pushy. I love this so much, and I will just give you an education. So call me for an education. Let's talk about it. So my email is Dina, Dina, and my company is BGA. And I like to say best girls around, BGAinsurance.com. Dina at BGAinsurance.com.
Sounds great. All right. Well, thank you both again so much. And thank you to our audience for joining this session of On the Mark. And we'll see you next time. Bye-bye.